A very welcome back to all of you. We have started solving questions based on dissolution of partnership firm. We have already completed one practical question. Now in this module, let us start with the another one. So in your notes, the question number 3, we're gonna solve right now. Here we go. Let us read question. Parag and Rajiv are partners sharing profit and losses equally. It is clearly mentioned the ratio is equal. They decided to dissolve the firm on 31st March 22. The balance sheet of the firm was as under. So on liability side, we have reserve fund, creditors, bills payable. I hope you understood about this, what is to be done. Yes, correct. It is to be distributed in partners. Capital account, and then on asset side, building, furniture, debtors, stock, bills receivable and cash. Now we have got this information. Let us understand this. The assets realized as under stock 9,200. So first let us mark our assets, stock, then debtors and then bill receivable. We have realized values of this. Now Parag agreed to take over the building for 9,000 and Rajiv agreed to take over furniture for 2,700. So the remaining two assets have been taken over by partners. So let us mark that also. Those are being taken care of. That means the realization expense amounted to 300. If nothing is mentioned about realization expenses, we will assume that there is a first case of realization expense, that is borne by firm, paid also by firm. So for this, journal entry would be realization account debit to cash bank account. That is what we will record because we are paying it and it is our expense only. Write up realization account and partners capital account. That is what it is mentioned here. But for practice, what we gonna do is we'll also be preparing cash account, and if there is any other subsequent account, that also be prepared. So here we go. This is a realization account. We have partners capital account and also cash account. In dissolution, your cash or bank account should get tallied. I hope you remember this. Okay. Now let us go one by one. Here we go. Balance sheet we have. On balance sheet, we will first record the capital balances. Whatever ledger accounts we have prepared, we should write opening balance for the same. So, by balance brought down 10,000 and 12,000. We have opening balance for capital account. That is what we have recorded. Now, moving further, in cash account also, we have this 3,000 balance. So, we'll write to balance brought down amount 3,000. These are very first basic step. Open necessary ledger accounts and write opening balances for those. Now, next one. We have all these assets. What we'll do is we will be recording it on debit side of realization account. So, to sundry assets, building 10,000, furniture 3,000, debtors 9,000, stock we have 10,000 and bills receivable we have 1,000. I hope you remember the step where we have to transfer all assets except cash bank to realization account on debit side. So the total of it is 33,000. This is at book value we have transferred, the same value what we have in balance sheet. Now next one is to transfer all the outside liabilities as well. So liabilities would be recorded on credit side of realization. So creditors, same. First we'll record the amount of creditors, then for bills payable, which are book values. Book values means same values. Look at this. These are the values we have recorded here as well. Okay, now again, total will take, it is 10,000. Moving forward, let us go for the next part of it. Now, we also know that whatever accumulated or undistributed profits or losses we have, that is to be distributed amongst partners in their ratio. So, this reserve fund is an accumulated profit which is shown on liability side. So, we'll transfer it to capital account on credit side, right? So, by reserve fund 4,000 equal share. So, 2,000 each. This is where we have recorded it. Capital account, credit side. Now, let us go forward. We are following the steps what we already know. So, just by following the steps correctly, just by writing amounts correctly, calculating amounts correctly, you should solve this question in 10 minutes or so. Okay. So here we go. Let us go for next now, adjustments. Now what we have to do is, we have to realize our assets. Okay, whatever realization we have, we'll get cash. Whatever partners have taken over, similarly we will record it. So first, we have closed our asset account by transferring it to realization account on debit side. Now whatever realization part we have, that would be on credit side, because if we are getting cash against the asset, our entry would be cash account debit to realization account. Okay, so that is the reason in realization on credit side, we would record it by cash. These are the amounts we have received. So stock, debtors, and also we have bills receivable. Okay, so the total amount in outer column, which is 18,490. This is the amount which we have realized from selling our assets. Okay, so we are getting money. I repeat, entry is cash to realization. This is just for information purpose के हर एक asset को individually how much we have got. हर एक asset को कितना पैसा मिला है हमें, ये समझने के लिए we have recorded it, but the actual entry is cash to realization, which is 18,490. So that is the reason in cash account also we should give second effect of it. So obviously on opposite side, that means from credit to debit side of cash account, realization straight away 18,490. Now there is no need to record all this. Why we have recorded this? To get the total. So now if we have total, straight away we would write it here. Moving forward. Now once we have recorded about the realization of assets in cash, now we'll talk about the assets which were taken over by partners. So if asset is realized in cash, or entry is cash to realization. If we are not getting cash, the partner is taking it over, the entry would be partner's capital to realization. So instead of cash, now we would write partner's capital. So let us understand the adjustment. Parag agreed to take over building. So we'll write here by Parag's capital. In bracket, you can write building just for reference purpose, and the amount 9,000 straight away in outer column. Then the another partner, that is Rajiv, agreed to take over furniture. So we'll write by Rajiv's capital, amount outer column 2,700. These are the amounts we should record. Again, just to remind you, we will never check whether there is a profit or a loss at the time of revaluation of assets and liabilities. We have already recorded the book values. Now we are writing the realized values. So indirectly, we have taken care of profit or loss. Okay, we'll not write it separately. Now, moving further. Now, as we have recorded capital in credit side of realization, we would also record the second effect in capital account, that is to realization account, and in individual partners column, we'll write these amounts. Moving further to our next adjustment, that is for realization expense now. So realization expenses are 300, nothing else is mentioned, like we have discussed already. The entry would be realization account debit to cash account. So in realization account on debit side, amount is 300, and cash account on credit side by realization 300. So this is what we would be recording. Now, after this, was there any adjustment related to liabilities? So if you can check it again, there is no adjustment related to how should we pay our liabilities or how liabilities are taken care of. Nothing is mentioned. So that is why this box is very much important. Is any outside liability still pending from payment? So yes, we have two outside liabilities, creditors and bills payable, and nothing is mentioned about the payment of it. So it is a hidden adjustment to understand. If nothing is mentioned about the outside liabilities, we would be assuming that the liabilities are paid in full. Liability के बारे में अगर कुछ भी बोला नहीं है, तो ये assumption होता है कि जितना भी liabilities था पूरा पे कर दिया, full amount पे किया उसका. So whatever liabilities we have here, those will be paid. So again, to pay anything, our entry has to be realization to cash. जैसे अभी हमने ये जो expense pay करने का entry किया, वैसे ही अभी liability pay करने का entry. So to cash account, sundry creditors and bills payable, the total amount 10,000 we have paid. Entry is realization to cash. So in cash account on credit side, we would record by realization account. by realization account. Amount is 10,000. Now, we have paid the liabilities. We are done with realization of assets. We are done with payment of realization expenses as well. Now, what is left? Do we have any partners loan account? So the answer is no. We don't have any loan account. So definitely we will not open loan account and balance it because there is nothing to be recorded. So straight away what we'll do is we'll start closing our ledger account. So first one is realization account itself. We have taken total of it and the balance would be transferred to partners capital in their ratio. So 3110. It is a debit balance because debit side is heavier. So we are getting the balance on credit side. This refers to debit balance. That means it is loss. So doesn't matter whether there is profit or loss, whatever it may be, we have to first transfer it to capital account of partners. So this amount we will be dividing in partners in their ratio. So right now the ratio is equal. So it is very easier for us to divide this amount into partners. So by partners capital account, Parag will get half share of loss and also Rajiv will get half share of loss. So this is what your realization account looks like. This is your realization account. Now whatever is the balance, we will be transferring it to capital. So capital account on opposite side, we should transfer this realization loss. So to realization account, same amount, 1,555, 1,555. Now what we have is, what we should do is, we should close capital account. Okay. So capital account, by closing it, whatever difference would be transferred to cash account. So here we go. For Rajiv, the total on credit side is 14,000. We will deduct the debit total from it. So the balance we'll get is 9,745. For Parag, total on credit is 12,000. We'll write the same amount on debit side and we'll deduct this amount 10,555. So the balance left is 1,445. So these are the balancing amounts for our capital account after closure. So this will be recorded as cash. Now why won't it be closing balance for capital? Why we are not writing balance CD for it? Because the business is shut down. This dissolution we are doing, right? So there is nothing left now. So whatever capitals they have, the final settlement we are doing about it. So as we are writing to cash, that means firm is paying amount to partners in full and final settlement. This much amount is paid. Okay. So from capital account now we'll transfer it to cash account on opposite side. So by Parag's capital, by Rajesh's capital, these are the amounts we have recorded. And now what we'll do is we'll take total of cash account. It should be same. Debit and credit should match. It should tally. So here we go. Let us take total. Total are 21,490 for debit. Also 21,490 for credit. That means our cash account is getting tallied and here ends our question.